There's no bigger focus in the economy right now than the role of the supply chain and difficulty getting materials when demand is picking up. We just saw prices paid in the ISM services jump once again. Let's go to the team of Prologis that has a very unique perspective on this. Chris Caton is the managing director of global strategy, joining us from Prologis. Chris, good to have you back on the show. I want to dive into your guys' data because you have an index that you track, the IBI index, that you describe as an economic leading indicator. Walk me through what's in it again and what the latest data show.
Yeah, it's put together exactly just like the ISM you're referring to. So it's a customer survey. Our customers, we hear from about 500 per month, and we ask them, how's business? Are you growing or are you shrinking? The latest index, 68, is the highest since 2018. Really strong activity levels. But look, when I think about what are we seeing in the marketplace, what are we seeing right now? And I was here, like you said, 90 days ago. I think we've learned a few things. One, the economy's roaring for sure, and that's a problem. Two, look at retail sales, up 8% in the holidays, 15% in the first quarter, and in particular, e-commerce. And we're seeing that's up by a third, more than 20% of goods retail, e-com related, and that's requiring investment specifically in the supply chain. But I think the most importantly, the thing we've learned the most, it relates to the importance of the resiliency of supply chains, whether it's the blockage at the Suez Canal, whether it's wait times at the port, pricing in the trucking business, or simply stockout rates at retailers. Never has supply chain more clearly dictated the winners and the losers as it relates today in terms of.
Who are those winners? Is it those that have the shortest distance from point A to point B within their supply chain? Am I oversimplifying?
No, it's a great question. Look, what I want to focus on, I actually think is the net effect for our business. Never in the near 40-year history of Prologis has business been stronger. I'm looking at demand levels over the last 6 months are historic, right? Demand spiking. What else is spiking? Let's look at rental rates. Customers are competing for scarce availabilities, and pricing is going up really quickly. Also spiking is private equity demand, and that's leading to values of these buildings going up, and that's positive also for us in terms of raising capital for our private equity funds. And then lastly, on the supply chain for building buildings, the replacement costs in our business are also spiking.
Utilization rate is another metric that you track, and it's moved up quite a bit over the last couple months. And I remember last time we talked about the trend from the last decade having slowed a little bit, but now obviously better than it was a year ago. Where do you see this going, and what determines where this goes? Because while the activity is back near these all-time highs, it looks like the utilization rate still has a ways to claw back.
Yeah, it's a great point. The question, I think, is, look, where is utilization rate today? Where could it go? And equally, what is the future of supply chains, and how is that going to translate to demand for your industry? So look, utilization rate 85% today. That's in kind of a normal range, as you can see on the chart. So what I think is important is the importance of resiliency in supply chains. We're not there yet, right? When we look at how things are flowing through supply chains, look, containerized imports in the United States up 25% in the first quarter, historic growth there. The challenge supply chains are having is keeping up with that customer demand. So when you look at inventory to sales ratios, still in the basement, still really low. And when we talk to our customers, they're talking about wanting to raise their IS ratios, want to raise the level of inventories so they can keep their customers happy, they can have more resilient supply chains rather than the efficiency that we saw 2019 and years earlier that really just didn't perform in the pandemic. So as I look forward, future supply chains, look, that's a later this year, next year, following year type trend. Right now, customers are still focused on simply getting goods to the end consumers and getting their customers happy. The future state is going to be a utilization rate that's in the same range, to answer your question, but it's going to be about carrying more inventories and ultimately needing more logistics real estate.
One of the things that has been a big part of this demand cycle in the comeback of the economy here is housing, and we've seen the way the home buyers have been unstoppable. I know that you measure construction and how construction starts factor into this. How does your team look at construction? Is this more from a commercial real estate perspective, or do you see that there are parts within the housing supply chain that stop over at Prologis sites?
Oliver, great question. Absolutely, yes. The construction industry and the housing industry represent round numbers 20-25% of our customers, and they have been growing faster. They take more of their fair share of new demand over the last 6-9 months. So it's definitely the construction materials companies. We've got several in the top 25 of our customer roster. It could also be the furniture industry and the soft goods retailer. So taken together, there's a lot of activity that's just only recently begun to pick up. Equally, when I look at the contours of demand, what you're going to see is that this is going to be a record for demand, right? Last 6 months, like I said, nearly 200 million square feet across our industry. That's a record. 2021 is going to have record demand. I think 2022, if things play out as they're headed, equally positive outlook for demand. And housing is going to be part of that story. But also, we're looking at complete reinventions of supply chains, whether it's food and beverage or the healthcare space, alongside continued expansion on the e-commerce side.
Chris, how much more is there to go? If you have to, I know this gets a little bit on the speculative part, thinking about the future, but right now, one of the most important questions is the difference between how investors understand that kind of first recovery impulse, as we see data now starting to hit or come in slightly shy from expectations. There's a little bit of a tone change lately, but on the flip side, there are many that would argue, well, we might understand the recovery potential well, and it might be priced in. Perhaps the inflationary part is not priced in. If some of that inflationary impulse is coming from the supply chain disruptions that we've seen, does it seem like there's still more work to be done to smooth out those disruptions, i.e. is the inflationary contribution from the supply chain still potentially have more to give?
Yeah, it's a great question. That's what we really spend a fair amount of our time, our research team spends time on. Look, I think the key message is the trends I'm talking about, the new normal for supply chains, the acceleration of the future of retail. These are 10-year type trends for our industry. Look, we saw globalization play through supply chains for 25 years, and we're really in the third, fourth, fifth year on the e-commerce supply chain reinvention. And so this has a decade or more, right? By 2030, we're going to 35% of all goods online, and supply chains aren't ready for that. And equally, as I was talking about the resiliency of supply chains, the need to carry more inventory in supply chains, customers simply have historically been tuned for efficiency. Today, they're really focused on simply getting goods to the end consumers, really fulfillment by any means necessary. And I think later this year and into next year, we're going to see triage transition into strategic reassessments of supply chains. Okay.
So themes that have been underpinning part of this build out continuing. Chris, thanks for the update on the numbers.
Great to be here.
Thank you. Chris Caton is the Managing Director of Global Strategy and Analytics at Prologis. PLD is the ticker for the stock.